How much can I borrow is a question that I get asked all the time, and it's not as straightforward as you might think. But in this video, I'm going to be giving you a rough idea of your borrowing power. Hey guys, this is Sam at Rosehill Financial Services. If this is your first time watching us, I hope you do find our content useful, and please do share with anyone who may benefit from watching this video too. So we're going to be looking at 6 of the main factors involved when it comes to working out your maximum borrowing. Of course, there are many other factors that may be involved when it comes to working out your maximum borrowing, which is why we recommend speaking to a great advisor early into the process to be able to advise you based on your specific circumstances. So the first point is your income. Now, many lenders in the UK will calculate your income in different ways, especially when you are self-employed. Now, if you're a limited company director, a lot of lenders will want to use a 2-year average of your salary and dividend figures. Now, some lenders may allow you to use your net profits plus your salary. So if you tend to keep more profits in the business, this may be a more suitable option for you and may allow you to borrow a little bit more. If you're a sole trader, lenders will generally want to average 2 years worth of net profit from self-employment. However, if you are a growing business, there are some lenders that may allow you to use your latest year's income. And if you're a new business, there are some lenders out there that will allow you to use your first year's income. Now, if your accounts show a decrease in the latest year's income, then generally speaking, lenders will want to base the maximum amount they will lend to you on this latest year's income, and they will also want to see an explanation for this decrease in income. Now, to keep things simple for this video, if you are self-employed and say you had consistent earnings of 60 grand a year, assuming that you've had no debt or very minimal debt and minimal committed expenditure, then a good rough guide for you would be a lending of 4.5 times that income. So in this scenario, you'd be looking at about £270,000. However, depending on your specific circumstances, there are some lenders that will allow up to 5.5 times your income. So speak to your broker and they'll be able to advise you based on your specific circumstances. So point number 2 is your debts and committed expenditure. Lenders are generally going to be taking into account everything from your utility bills to your student loans, car finance, personal loans, credit cards, childcare costs, and the list goes on. The more debt and committed expenditure that you have, the less disposable income that you're going to have. So generally speaking, the less debt and committed expenditure you have, the more you're going to be able to borrow. So point number 3 is your dependents. So this can be your children or anyone who is financially dependent on you, such as an elderly relative. Now, similarly to your debts and committed expenditure, lenders may lend you less money if you have more financial dependents. And this is simply because these financial dependents are costing you each month. So your disposable income will be lower. So for example, someone with no kids will generally be able to borrow a little bit more than someone with 2 or 3 kids. Point number 4 is your credit score. If you have a good credit score, then you may find that there's more products available to you. If you have a bad credit score, then you may find that you're limited to the lenders that you can proceed with, depending on how bad the credit score is. For those with worse credit scores, you may find that the products available to you come with higher interest rates. And this is because you're seen as a higher risk to the lender. Things that can affect your credit score is going to be taking out any new line of credit. So if you take out a new credit card or a loan or car finance, whichever it might be, that will impact your credit score. Another factor that can impact your credit score is any adverse credit. So if you've had any missed payments in the past, or if you've had any county court judgments or whichever it might be, this is likely to limit you to lenders that are going to be available. Point number 5 is the mortgage product and term. The mortgage product that you choose can sometimes have an impact on the maximum amount that a lender is willing to lend to you. So to give you an example, a lender may lend you a little bit more if you take out a longer fixed period. So for example, a 5-year fixed as opposed to a 2-year fixed. Also, if you're looking at taking out a shorter mortgage term, so the length of time that the mortgage actually runs for, then there may be a limit on the maximum amount that you can borrow. Reason being is because once you shorten that mortgage term, the mortgage payments are going to be higher, so it's going to eat into your disposable income that little bit more. So the mortgage term can also be impacted by the age of the eldest applicant on a mortgage application. So generally speaking, the older you are when you apply for a mortgage, the lower the mortgage term is likely to be. So the last point that we're going to be discussing, which can impact the amount of lending that you can get, is your deposit. So if you have a larger deposit, you're generally seen as lower risk to a lender. So with this being the case, if you do have a larger deposit, some lenders may increase their maximum lending. On the flip side, if you've got a very low deposit, say around 5%, then some lenders may choose to limit their maximum lending. So just to summarise on the factors that we've discussed today, we've got your income, we've got your debts and committed expenditure, we've got your dependents, we've got your credit score, we've got your mortgage product, and we've got your deposit. These are all factors that are going to be taken into account when working out your maximum borrowing, but as we've discussed, it's always best to speak to your broker early into the process so that they can advise you on your specific circumstances. Now, before we leave you today, I am obliged to tell you that your home may be repossessed if you don't keep up repayments on your mortgage. If you'd like any further information at all, please don't hesitate to leave us a comment or message me directly and I'll be happy to help. Thanks for watching, and I look forward to bringing you more useful content in the near future to help you secure your dream home.